Hey guys, Stock Saturday, and I thought I would do a sort of end of year review as it's New Year's Eve. Bit of a slow week, really. The portfolio's down £1,000. Not made any sort of changes. Not spending this rather large 15 grand cash pile at the moment. Nothing sort of particularly sticking out. I think we're in for a sort of bit of a rough time. First quarter next year, potentially. Still sort of thinking we're not too far from the bottom, but yeah, potentially sort of still a little bit of bad times in Q1. So I'm just holding off for now. Some of that still could be withdrawn for crypto. Or transferred into the ISA and sort of something bought in there. I will have to do that eventually. But yeah, not too much movement on sort of most of these stocks. The Nasdaq and S&P have been a little bit rocky with Tesla and sort of other growth stocks and even big tech not doing too well. Apple sort of down a little bit and Microsoft and that sort of thing. So yeah, I expect a lot of people have maybe done a little worse, but yeah, we'll see. So I thought I would have a look at some of my sort of best decisions, if you like, best performers, and worst, of course. So I guess chief among the worst is Argo blockchain. This has not been going well all year, largely due to crypto prices, but I always knew the miners would be sort of an amplified version of whatever happened to crypto. And yeah, this has sort of done that in spades. So my average, I wasn't buying right at the top, but yeah, I was sort of buying on the way down, thinking that crypto would sort of still do well even this year, and that's not sort of panned out. So even at the beginning of the year, they were down from sort of a £3 high to 84p. I was sort of adding then, thinking that they would do well, and not really taking into account that they'd overstretched themselves trying to expand during the good times, taking on debt, which was not very favourable debt, very high interest rates, sort of 8% at one point, and then up to 12%, rather than sort of taking the harsh decision, I guess, to dilute shareholders, which some of the other companies have been doing, which obviously you lose a lot of, existing shareholders would lose a lot of their value as the share price comes down, but it means they've got less chance of going bust, basically. It's a bitter pill to swallow, but strengthens the balance sheet, where debt sort of is still bad for the shareholder and doesn't strengthen the balance sheet, makes it a hell of a lot worse and can force you to go bust. Obviously, Argo haven't. They've sold their main facility basically to Galaxy Digital, and they're going to be hosting. They've kept the machines. They're going to be hosting them in Galaxy's now facility, but I just kind of think this makes them largely worthless, to be honest. They've still got two mines in Canada, but yeah, I think I would just rather, taking into account what debt they still have got and their sort of new capacity and basically not owning the facilities, just can't see that they're worth anything. So it's risen up, but yeah, I'm still happy that I switched. Obviously, should have waited until it rocketed up to 7p. I sold it about 3p or something. But yeah, so that's not been a good move this year. Meta Platforms next up. This was sort of one that dropped quite heavily on the sort of news in the first quarter this year, and I sort of got in thinking that that would be sort of a decent point, about 210 or so, and then sort of averaged down in the 170s, I think, and my sort of average is about 195. Not really sort of anticipating them having quite so much trouble with Apple, with the sort of privacy, the new rules. They're not sort of able to target people on ads quite so much. Obviously, the sort of downturn in advertising in general, and their sort of continued spending on the metaverse is not going down particularly well with shareholders. I sort of, again, probably in the crypto mindset, had sort of thought that the fruits of this investment, if you like, would come sooner than they probably are going to. Looking at what they're sort of outputting at the moment, doesn't seem the best. I think they are spending, from what I've read, quite a lot of the money that people think they're spending on the metaverse on AI stuff, which is sort of applicable to the whole business, really. So it's getting masked as, dead metaverse spend when really it is AI trying to get round the Apple restrictions, sort of in part. So, yeah, it's not obviously it's risen up since the sort of $90, slightly below $90 points earlier in the year, a couple of months ago, and we're sort of at 120. But yeah, I still think they could sort of help things out maybe by communicating the spending a little bit more. Again, as I've sort of mentioned before, some of the metaverse spending is buying studios, which could be making a game. Obviously, it hasn't come out yet, so there's not going to be any revenue. People keep talking about how much revenue is coming out of this spending. If you buy a studio and get them to make a game for a year and a half, 2 years, then you're not going to see any revenue from it straight away. But things are being built. So yeah, I'm still fairly happy with Meta, but it's been a fairly big loss. So that's not been the best for this year. And then there certainly is a category of sort of missing out on sort of stable return, basically. So I had Johnson and Johnson sort of earlier this year, sold out, and sort of thought I was buying the dip on sort of growth stocks, and the growth stocks have carried on downwards, and Johnson and Johnson has just continued to do what it does, basically. Sort of on a 5-year chart, it's just continuous upwards, continuous dividends, and sort of not just Johnson and Johnson. I would say this sort of represents the whole consumer staples, really. So anything like your Pepsis and your Procter and Gambles and that sort of thing. While I still sort of think some of them are overpriced, I guess you have to call it a mistake for selling out of these, certainly too soon, and selling out of them at all, really. Could have had Johnson and Johnson as a reasonable position, still paying hefty dividends, or 2.5%. But if you have a large position, it's a reasonable dividend, and could maybe be putting that dividend to growth stocks rather than sort of selling the whole holding, as I did with one or two others as well earlier this year. And I wouldn't have had those growth stock losses. So Johnson and Johnson, but also the whole sort of staple side, some of which I did sell, as I say, too early, or maybe shouldn't have sold them at all. Moving on to something a little bit more positive, Sylvania Platinum. So still my largest single stock position, which for a sort of 270 million penny stock, basically, is possibly crazy, but I still like the company, and I still like the commodities that they are linked to. A big fan of commodities, as you sort of see from some of my other holdings, and yeah, it's just been very steady, sort of up about 25%, I think, on the share price, and sort of a hell of a lot of dividend return over the last couple of years, culminating in the £930, I think it was £940 earlier this month. So that's been a great hold, and can't really see me getting shot of it anytime soon. Future looks reasonably bright to me. Potential in the sort of hydrogen economy going forward. That's the sort of potential we have, the hope we have for diesel and petrol car demand being replaced. A little bit sort of more uncertain than those industries. There's sort of various ways of making green hydrogen, but the one of the ways does have platinum, so not too sure about sort of future demand for palladium and rhodium, but yeah, certainly on the platinum side, that's good. Another positive for this year, I didn't really buy this year, but Broadcom, I would say holding it this year. Again, sort of it's done well, but I would say this also sort of represents cautious but sort of profitable dividend growth companies. So you might not consider them cautious. They have made sort of huge acquisitions like the VMware acquisition, that sort of thing. But I would still say they're sort of relatively cautious company. They don't sort of raise the dividend further than it really should go. They've still got a very sort of low payout ratio, but it's been a increasing dividend at a fair rate in line with their profits, really. And these sort of stocks have done sort of pretty well this year. Not really been hit by the semiconductor shortage and sort of issues. They largely seem to be obviously still tied to Apple, who've been doing sort of reasonably well, even if the share price hasn't. They've been selling a lot of phones over the last couple of years, so Broadcom do well as well. And yeah, I think this whole sector has done pretty well, similar to Johnson & Johnson, I guess, but these are sort of more growthy type stocks, not so much staples. So yeah, these sort of companies seem to have carried on doing sort of reasonably well this year. You're sort of, as I say, profitable. That's sort of the key thing. Dividends, growth companies. So yeah, that's been good. And the evil companies like Shell. So I sort of bought this again. Didn't buy this year, but sort of holding on when everyone was, or a lot of people had been sort of taking profits. I sort of bought in the, I think £11 is my average, and sort of everyone was saying, it's overpriced and take profits and that sort of thing, comparing it to pre-COVID prices, I guess. But I still think with their sort of natural gas and oil output, even oil sort of being at a relative low compared to sort of the previous highs earlier this year. Still earning a fortune and sort of getting more into renewables, even though it is still a fairly small part, but growing. I do think there's potential for sort of the green energy PE expansion. If investors are keen to sort of see both sides, apply sort of a higher multiple to the green energy side and, a sort of more normal low, 5 PE to the oil and gas side. I think overall you could get an expansion. It's just whether people are willing to see it as, two sides of a company. But certainly the sort of iShares green energy stock multiples that a lot of them used to sort of get in there last year was very, very high. So if we start seeing a growing portion of Shell that people see, could have that multiple, then yeah, I think Shell could sort of do really well. I've always liked the idea of putting oil and gas money into renewables, which seems to be what they are doing, although they are still sort of expanding oil supply, which I guess is necessary. We can't just switch to renewables tomorrow. It just doesn't work. So yeah, that's been a decent hold, and again, can't see me sort of getting rid of it anytime soon. Still looks fairly promising. I try and keep up as much as I can with any sort of renewables development and purchases they're getting into, just to check they're not sort of resting on their laurels. But yeah, that's been a decent hold. So yeah, that's the sort of, I guess, a review of how the portfolio's sort of done for the year. Some mistakes, obviously, and some sort of done reasonably well. This isn't sort of all of the stocks I've held this year. There's quite a few sort of, a couple that I've left on here. Nintendo has sort of performed maybe a bit better than what I'd bought since. Lennar is still very much at the highs, but I think I sold that about $87, so that's not too bad, and I really don't have a positive outlook for housing market, either US or UK, so I wouldn't really want to be holding that. Yeah, the ISA side sort of has barely changed, and the Pan American Silver sort of, I guess you could say, has not been the best hold for this year, but very sort of bullish on silver going forward, so would be happy to hold that. Hive blockchain obviously in with the Argo blockchain scenario, although they're not going bust, they've still lost quite a fortune. And Chinese tech has sort of come back from the dead and is not doing too badly. Still a little down, but certainly Baidu, for example, sort of 8.8% down since I bought, so not too bad really. China sort of potentially opening up more and more, and yeah, they've been sort of reasonably okay. I don't show the options in here at the moment because it's just sort of difficult to get prices on them, and yeah, I'm just sort of easier not to show that. But I do have about £1,000 now into options, which are sort of potential money makers for the next couple of years. Could go to nothing, could sort of do reasonably well. That's in mainly crypto miners. I took on Hut8 mining, sort of seemed as a reasonable bet. So 2 years for that to come good, and we'll see how we do. So yeah, let me know how your portfolio's done for the year, if you've got any sort of good and bad points, and what your sort of goals are for 2023. So like and subscribe, and see you soon, and Happy New Year.